this is beautiful because of everything that happened this week. This is why I give these signals. I give these signals. I want to, of course, make people money with them, but I also want to get on here and teach through this because all of you have not been trading for as long as I have and haven't went through the drawdowns like I haven't went through and had to lose literally tens of thousands of dollars and go through all the different things that I have. Some of you guys are in a drawdown, then you're like, man, I put 6,000 in over the last year and I have nothing to show for it. I put X amount of dollars in this amount of time and I have nothing to show for it. And that's like literally everybody's Forex career, unless they were like born into a family of like really good traders that already had the knowledge and everything, or they got in with a mentor, like myself or someone else who was successful in trading and, didn't have to go through those things. Because for the most part, we try everything on our own and then, we tend to have to go through the learning curve, and that's just a part of the process. We're not really taught these kind of things. We don't really, we're not taught these kind of things. We don't get to see these things day in and day out. So therefore, we're pretty much learning them on our own, unless you're a part of, a team or a company like what we have in Visual Prowess that teaches education, of everything. But my thing is I really want to, put these signals out here for the potential to make money, but also for the core key potential to be able to teach and educate, everyone every single time. That's really my goal in this. So when we look at, odd USD, I want to break something down so that you guys can understand, because I get it. Like whenever I see it all and I pay attention to everything, I can see it, but it's about letting you guys see it and giving you understanding, the most amount of understanding possible that you can see like, oh, okay, this makes sense as to why it is rejecting this or it's not going in this way. Because every single trade that we're doing, like every time that I get into a trade, every time that I go to enter, to go to look at a trade or anything like that, I'm going for a 3-to-1 potential, and the market is giving me a 3-to-1 potential. So when we're looking at trade setups, I'm training your eyes to find 3-to-1 potential. This is why every time that I get into trades, I go up thousands of dollars. One, because of my account size. Two, because of the lot sizes I place on the trade. And three, because I'm constantly going for 3-to-1s. So when that stuff happens, I can constantly get in trades that are most likely going to make me money. I have the potential to make money. But if you stray away from that and you can't see reversal zones and understand what they mean, then you're not going to be able to understand, you're not going to be able to master trading reversal, because there's two core key concepts to be able to master trading. Number one is master of reversal, and number two is mastery of your mind. So you have to be able to master your emotions and master your mindset whenever specific things are going on inside of the market. So it's extremely important that you can do those two things in this. Number one is what I teach you constantly. Well, both of them. We'll just say both of them. Teach you constantly mastery of reversal. There's many different ways to master reversal. You can master reversal through indicators. You can master reversal through patterns. You can master reversal through different support and resistances and different things like that. There's many different ways to be able to do it. But then you have to learn to master your mind. Now, that is where you have certain things in your past that you have constantly allowed to control you in the present, because you're allowing your subconscious to continue to control the way that you think about everything around you. So that plays a core key role in trading, because when you're in the market, you have something that you want to gain from the market. What is that you wish to gain from the market? Most of it, all of it, is money. But then what does it mean? What does that mean? What does money mean to you? For some of you guys, it means Chanel bags. For some of you guys, it means Lamborghinis and Ferraris and exotic cars. For some of you guys, it means giving back to your family. For some of you guys, it means being able to travel the world. For some of you guys, it means this, and everything is different. So when you're in the market, you are constantly having to run into the market not going the way that you want it to go. Because when I train you on spotting reversal, you are expecting the market to reverse in your direction, because you are used to that in your everyday life. Because when you're taught something, like, oh, okay, well, if this is the equation to this, then this is how I solve this equation every time. But the weird thing is the market doesn't run off of that, because the market runs off of probabilities. The market runs off of everybody that's in the market at the same time. And at any given time, one person can exit a position and totally change the entire outlook of the market. When those things happen, it goes against your ways of market reversal teaching. But then that's why you have to understand market mastery of your emotions and mind, because you have to understand trading is probabilities. So that means that you have to understand risk control. So if you have not understood risk control, the market is going to take a lot more than what you necessarily want it to. What is that going to do? What cycle is that going to do? That's going to put you in another cycle. That means that once you lose money, all of a sudden you built your account up, boom, 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 so much. Okay, I'm 100%, 300% up, 400% up. And then that lack of respect, what did I say on my story yesterday? A lot of us do not respect the market and what it can take from us. So what happens is that market takes exactly everything that you made plus more, because you did not respect it. And so understanding that risk management is extremely key in keeping you in an even keel inside of your mind. See, I'm giving you guys a 10% rule because it is a very even ground. So when I tell you guys don't risk more than 10%, it's a very even ground. Why do I say that? Because my greedy ass in the past would love to risk more than that, and I could make it a ridiculous amount of money and then a ridiculous amount of ROI. Really, it was the ROI that was really ridiculous, not necessarily the money, but it was the ROI. It would be 1,000% in a month, 2,000 in a month, 3,000, 4,000. The highest I ever did was 6,000% in a month. But then taking out a withdrawal, taking out money, paying myself, I would try to do the same thing. The market never moves the same. It never does the same thing over in what it did in the last month. It is about our resolve to be able to look at the market, see the setup, take the setup, protect ourselves, and then exit when we're supposed to exit. Look for the new entry. The market's going to give you a new entry. You just have to listen. That's the great listener. That's what I talk about in being a great listener in the market. So the greater the listener that you are, the more potential money you have to make. So in doing this, and how this works, is it's when your setups arise, when your setups get there, you look at the past and you say, oh, okay, what constantly has reversed off of this level? It shows that the market doesn't go up at this point, right? And it doesn't go down at this point. So I enter. And so when you do that, you set yourself up for a chance to have a profitable trade. Now, you would be surprised at how much you go into profit, but it may not meet what your ego wants the profit to be. There's a big difference. You might go into profit, you might see your trade's going to profit, but your ego wants more, okay? And not only that, but as your ego is wanting more, you are constantly chasing a profit. You're constantly chasing money, right? And if you put it in that way and you don't get yourself to an entry exit strategy and know a clear defined goal, then you're constantly going to run into a circle and a cycle that demoralizes you because you see your trades go up so much dollar amount, and then you lose all that dollar amount because the market goes against you. And that can be equally as demoralizing as not following through on your trades, because it can be as simple as, man, if I would have just held my trade, I would have made this amount of money. And then the next time you decide to hold your trade and you lose 10%, but you say you went, I don't know, 1 to 5% in profit on the trade if you did a 10% risk. And you've seen that money and you're like, oh, yeah, the trade's moving nicely in my way. And then all of a sudden, you wake up the next day and the trade's gone and you lost your money. And you're like, damn, if I would have just taken it out this time instead of trying to hold it, I would have made the money. And you constantly run in a damn circle because you're not focusing on following the strategy. The market's not always going to be the same. It's going to reverse at times at specific levels. It's going to do things that it doesn't necessarily make sense. That's a part of the market. That's just what it is. It's a follow through phase, and it's a phase where there's non follow through. These are all things that happen constantly in the market all the time, right? All the time those kind of things happen. So I want to break this down on odd USD because I want you guys to understand when we did this, why we did this, where we attacked this at, and whenever we did this. So there's not a whole lot to go off of on the monthly and the weekly. There just isn't. You know, there's nothing in this area. This right here is kind of like a back and forth zone of nothing really. The next high is about right here. We're very far away from that. But once you start getting established highs off the daily and the 4 hour, you can start to see trends begin to formulate and populate inside the market. So what we're going to have to do is we're going to have to shift it to the daily time frames. Okay. So this is where odd USD is at now. Now, in, this, for instance, if you were to go off of this to this, this is, if you look at, the main wicks of this is like the very, very tip of these wicks right here. This is like the very tip of this to, the tip of that. And then if you go the close of the candlesticks off of the bigger time frames, it's going to be about right here. That's about the zone. So this is your zone of where you have your buyers, right? This is actually, this is the weekly. I actually did it more off of the weekly time frame here, and then I shifted it down to the daily off of this so you can see a little bit more of a clear picture. And then I'm going to zoom it in because we have this established through here. You have the buying zone. This is more of the daily chart right here. This is more of your daily this is more your daily support of the uptrend that happens here, because this is the trend right here. As you can see a shift under it here. It's under over this zone right here. But I'm not interested in swing trade, holding a trade for days and weeks at a time. This was the longest that we've held a trade. I think we did this for 3 days. So my stop loss would normally be like up here if I'm looking at the market in this, but we have something that's going on deeper inside of this market. So we have to zoom in off of this level. This here is a selling zone straight through here. Now I want you to see how this goes, because we don't know. The thing is, we don't know when the market is going to reverse. We don't. And if you look at this, the market drops here, it drops here, it drops here, it drops here, right? And then here's the zone right here. So let's shift it down to the 4 hour. Remember, we go to smaller time frames for entry, right? This is what we look for. And I want to show you guys this. So this is what we look for. These are the different things that we pay attention to inside of the market. Here's your zone. And if we did the close, here's the close of the time frames is about right here. Let me look at this real quick off the daily. I'm going to look at the daily close. I just want to make sure I got this right so that we have this. And as you can see, look here. Yep, close of the daily, right at the close of that daily, right at the close of that daily, very close to the close of this daily here. Now watch this. Two things. Now look. Notice what price does off these lines right here off the daily. As you can see this, watch. Watch this. I'm going to shift it to the 4-hour now. Now watch this. Go back to this. Here is our trade off of the levels that we're looking at. Short position. Here's our zone. Remember, anywhere in this box is the zone in which we want to take any entry. Anywhere in that box is a zone in which we want to take entry. Okay? Stop loss. So 30 pips. And then we have our 3-to-1 potential is right about here. See this? Anywhere in this zone. Okay? Remember, you cannot see what the market is going to do in the future. You can't. If you do, let me know, please, because we'll make a ridiculous amount of money in like a month. We'll be billionaires, all of us. Unless you know how to predict the future, then we do not know what is going to happen. So what is it that I teach? I teach you have to trust the market, and you have to trust what it's told you in the past. So when you see this, there's the entry point right here. Every single time this thing gets to this zone, what do I say? 3-touch rule to infinity. Every time it gets to that line, it never has went above that line. So you have to understand stop loss placement. There's our stop loss. Is going to be placed right outside of the zone. It does not get hit there. Okay? And then you have to understand that when you're doing this, this is how this works. We entered, when I seen this, we looked at AU, right? It came all the way to that point, and we entered it literally the moment it reached that line. It was like literally there. The moment it reached that line is whenever it hit. Now, when you see these things happening, the market chose to go up and go through. There's not a sell. We don't sell up here because price is up here. We don't do that. That makes no sense. There's no reason to just be like, oh, I'm going to sell it up here because I think it's going to drop. Okay, how many people in the world that you know would be like, oh, we're going to sell high when it's high and we're going to buy whenever it's low? Everybody says that. That's like what everyone says. But it doesn't mean you just do it whenever it's at its highest, do it whenever at its lowest. That makes no sense to have a strategy making you consistent profits over time. So when you see this, what did we do wrong in taking the trade off of this level? That's what you have to ask yourself. It's not, oh, I'm losing. Oh, it's positive. Oh, it's negative. I go in the group chat and I joke around because trading is not that serious. I don't put so much energy and emphasis on everything going my way or not going my way. That's what I mean by it's not that serious, because I don't let it control me. So when I do it, I know like, oh, okay, this is the level that I'm going to get in at. And now I'm like, oh, wow, I have the potential to really cash out and make some money on this. I got a potential to make another 40,000. I got a potential to make another 20,000, another 30,000, another 40,000, right? And when I think in that way, and I think in like, okay, in terms of I'm looking for the market to go down to this level right here, that's what I'm looking for, then I understand what my entry and my exit is. Not until it hits this stop am I done. And it got there 3 different times. What did I say? I forget what I said. Something about Some of y'all probably had decimal booty holes or something like that whenever that thing almost hit it. Those who held it. Those who didn't, you took it out early, whatever, you got a smaller loss. That's cool that you did that, but it's not always going to work like that every single time. You'll be real salty whenever you take it out because it almost hit your stop loss and then the trade goes 40, 50, 60, 70% in the direction. Because those things will happen, and it's happened to people before. But you have to understand that there was nothing done wrong off this. Whenever price got down to here and it got in the 100s, I was watching it, and that's why I said what I said in the group chat, because I was like, uh-oh, I know you see it going down. And then this right here was the push up through. But I'm not going to exit because it pushes up here, because I know how the market works. I know how certain things go on. I'm going to let it go and hit my stop loss, because had this exact move began to happen to the downside, we're going to creep up to 10% in profit. Then all of a sudden we're going to get to 20%. Then we're going to reach our goal. Then we're going to reach our exit strategy. So when these things happen, notice we entered once the market got to right here, guys. This is where we entered. Right in the line that shows us that there are sellers engaged in the market. And guess what there was? This made me really excited right here too. All this fight going on, because I was like, ooh, damn. So this fight is showing me that there's a liquidity buildup, a liquidation buildup of money, of cash, and the market is pulling in a lot of money, and it's looking to go somewhere. It's looking to begin to take that energy somewhere. Now, there's not really been a big energy move. There just hasn't. It's still in the zone. But here's what I know. If price comes back down in this zone, what do I now know? I know, oh, so price is back underneath the zone again. I can sell. I might have to put a stop loss a little further out, but I can see that price is back underneath this. If not, if we start getting a buildup of price and we start getting a lot of buyers, you're going to get a zone in which you can buy, and it's going to give you that level of entry point. That will happen to you. You guys have to understand that it takes a little bit of time, though, in this going on. So whenever I look at these things, whenever I pay attention to these things, there's nothing that was done wrong. We followed the bigger time frames. We looked at everything. But this is exactly why I send out these signals, because it is something that we need to follow, that we need to see, because it shows us what the market is actually giving us. It gives us a clear-cut stop loss. It gives us a clear-cut take profit. It shows us where buyers are. It shows us where sellers are. It shows us those things. So we have to be able to pay attention to that and see it, right? The easier it looks on your eyes, the easier it's going to be to trade. I say that all the time because it's so true. This was the easy setup on the eyes. I thought when I looked at this, this was a trade that was going to be similar to last week or the week before that, whenever I sold it up here and we got this big drop. And then this was the zone right here. But guess what? The same sellers are not in the market anymore. You want to know how I know? Because the market is not going down past this line. It means that either these sellers have exited and they do not care about this anymore, or it means that they're not as strong as these buyers down here. And that's plain and simple how it is. And also, I paid attention to this trend right here. I'm going to even pull this down to the hour chart so you guys can see. I paid attention to this trend right here, okay? What are you doing, dude? Go normal. Look at this. See this? Buyers, 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 buyers. Oh, hold up. Buyers aren't there no more. Shot down. But it ran into this line right here. It could not break it. And that's plain and simple. That's all it is. There's nothing more complex about it. It just could not break that line. If it did, guess what? We would have been trending down. We would have been going, what is this move that happened? This was a 60 pip move. We would have been 60 pips to the downside right here. We would have been 60 pips down. plus our entry was at, it was like right here at 300. So I just want you to see this because it's important that you guys understand what this means. 60 pips. So hold on, let me see. From here is 18. So we are going to be looking at about 80 pips. That is almost 3 to 1. That move right there. That is 10 pips away from being 3 to 1. That means you are about 27% in profit right now. Had this move went this way. This is what you guys have to begin to look at the market. This is what back testing is. I'm showing you guys how to actually do this with your trades right in front of your face. If you want to make 4 figures a day, if you want to make 5 figures, 6 figures a month, these are things that you have, concepts that you have to understand, right? If you want the freedom that trading brings, you have to understand these things. You look at it, your attention gets so emotionally drawn to the trade going against you that you start to miss all the little details that are extremely important to your trading career. These things are extremely, extremely important to understand whenever you're in trades. These are important. So this is an example of this trade. What it made the choice, the money was not in our favor. That's it. That's all it is. And so you have to move on to the next trade. But this is something I really, really wanted to go into detail about because there's a bunch of signs pointing that this thing could drop. But there's other signs. There's always two factors. There's always two ways it can go at any given time. It's just what it is. It's just how the market is. So that's something that I wanted to point out. Another thing, as I was looking over different pairs, because I'm trying to find as many good setups. There's just not a crazy amount of liquidity in the market. The market is moving extremely in small zones. You can see it anywhere. Like this odd chart, if you look at this, you look at what has happened since January. This thing has moved. Watch this. Look at this. I want you to see this. This has moved 200 pips, 250 pips. That's the biggest move that it's had and it's been in a range, a 250 pip range, okay? See that? About a 250 pip range. Look at GBP USD. I'm going to show you this. So you look at this wild ass chart that I have drawn here. You look at this range. Look at this. It's constantly moved up. But look at the day ranges. These day ranges are extremely small. Look at the day ranges. Look at these day ranges right here. This is 100 pips on those 3 candles. Just want you to see this. These are things that I pay attention to since I've been trading so long. I pay attention. Look at that. Day candles of 180 pips. That's not a lot in GBP, in the GBP pairs, okay? Do you see the moves that here? I'll zoom this out. So this is in September, right? Do you see this massive drop that it has here in these days? And then it goes into a consolidation range here as well. These moves that happen. Do you see this was March, this was COVID? Do you see this move, this range? Do you see that drop? Do you see these day candles down here? Do you see this? Do you see that as a 500? Those candles are 500 pips. Do you see that? These are huge. This is a huge move. These are huge moves that happen. All of these candles are these look small. These days look small until I do this. This is a 5-day period of almost a 400 pip move, and this entire zone from the tip of this, look at this, all the way down to here is an 800 pip zone that happens, and then that drop is a 2,000 pip drop. These the same days. I want you guys to see these amount of days that are in here. These days that are in here are less than the days from right here to right here. Do you see the difference in the moves? There is not as much liquidity that is in the market that is driving the market, okay? You want to know where there's a lot of liquidity? Right here in this incompetent pair. There's a lot of liquidity in this pair. Look at this. I'm going to show you this. So you want to see this from, let's see, let's go the same amount of time, beginning of January, okay? This right here, look at this. There's a lot of money in these right now. Look at this candle right here, these candles. See this right here? 900, 9,000, 9,000 pips. So that's going to be like 900 pips in a day. That's what that is. That move right there, 1,100, 1,200. This time span from here to here. Okay, look at this. Look at this time span. That is, I'm just trying to look at this. So 41, so that's 4,100 in 41 days. Okay, there is a lot of liquidity in this. This is where a lot of money is circulating right now. But this does not mean that we're like, oh, okay, we need to go and trade Bitcoin. No, I'm not saying that. I'm saying that you have to understand that where the money is currently at. The money is in specific places, and the way that it is moving differently on the different currency pairs, okay? These are things that you have to be able to see, that you have to be able to understand. It is going across all of the board, of anything, of all the board. You look at the same 41 days that it does it. We'll go find it. Let's go look at this right here. Here it is. Here's Euro right here. January 4th, same day. Look at this. I want you to see this, because these are things that you have to understand. These are things I pay attention to, okay? Same exact amount of days, okay? Almost the same amount of days. 356 pips, okay? That's it. 356 from that time span in the same amount of time, all right? Same amount of time. Let's go look at one of the biggest moving pairs. This is even interesting. Watching gold. Gold is doing the same exact thing. Look at this. Since the day, it was to the T, the day, this time right here. This was the biggest move that happened, and it did it, watch, in 1, 2, 3, 4, 5 days. Done. Negate this move right here. Negate this move right here. From right here to here. Negate this move. 1,300 pips. This is 13,000 on here. Take that 5 days out of the market in gold. Now let me show you this. Look at the difference in this right here. Take those 5 days out. Here's the range right here, the top of that range. Here's the bottom of that range. 900. 900 pips. That is not a lot of pips in gold at all. That is not. This is my best pair that I trade. That is not a lot of pips. Do you notice, watch this, every time gold has gotten to this high or this low, it has every time making its way to where? Here. It comes here, familiar territory, and then comes back here. Every time it goes here. But watch this. How long does it usually take for it to, once it reaches this line, how many days does it take for it to get to the center of this? Watch this. Watch this. This is the very center of this line. Watch this right here. How many days does it take to get to the center of that line once it reaches this high? 1, 2, 3. 1, 2. Right? 1. And then look what has happened. See this? It hasn't even reached the line yet. It has not even reached, oh, I'm tripping. I said 1, 2. It has not even reached this line yet since this. Takes 2 days, 3 days max. Okay? Has not reached this. This makes sense if it doesn't want to break this. I mean, especially this being Christmas time. But once it rejects this line, it makes it in this time frame in just a couple of days. It doesn't take very long. But look what happens whenever it reaches this line here. It's not even pushing to the downside. It's not even reaching halfway of this line. Literally, it's not even reaching halfway. So what you have to understand is that every single time in trading, there's not always going to be follow through moments. There's just not. And some of you guys know the follow through moments that happen because some of you guys have been with me for over a year. You guys know what it looks like. You make 100% of your account in a day. You make, 50% in a day. You make 100% to 300% in a month. I mean, you've seen it, Some of you guys have no idea, but that's fine because you need to understand that this is a part of the process. This is why you pay what you paid to get in, and that what you constantly pay is for knowledge and education so that you can understand these things, right? These are things I never got. I never got these things, because I was hard-headed in a sense, and I didn't want to pay anybody. I didn't want to learn from anybody. I wanted to learn it on my own, but I also didn't really trust anybody on social media. That's also something I did not want to do because I didn't really trust people. So for me, it was a harder road. It was a harder process. But now that I know all these things, it doesn't I'm just like, oh, okay, it is what it is. The liquidity is low. Have to adjust the strategy. Have to adjust certain things. So there's tweaks and things that have to be done. That's why you see me scalp. That's why you see me come in and just start scalping for thousands here, thousands here, thousands here. 1%, 2%, 3%. I start scalping because I know okay, these conditions aren't going to be suitable for a big move. So boom, I'm just going to come in and start to take, those trades. You look at the market and the things that had happened in the last year. Look at these kind of moves. The range. Do you see okay, you see this, how that's in a range here? You go back and you look at the beginning of 2020. So it's right here, right here in December, right there, January. I pull this thing out like this. I want you to see this. So this helps you understand what this means in the market. So basically, it was right here. So basically, it was the bottom of this move here. Look at this. 61,000. 61,000. That's more than Bitcoin. Everybody's hyped up about Bitcoin and all that. Look what gold did. It trumped Bitcoin in the move that it did. 61,000 of a move. That's 6,100 pips that it moved in the course of, and that's from April. This is April. I'm giving you. This is April to what? This is July. April to July. That's that move that it did from April to July. That's not even a full year. I was just showing you from the tip of that move right there. Then it goes into consolidation. Money gets moved, guys. Money gets moved constantly. It gets moved from different commodities, different indices, different currencies. It moves all the time. And so these are things that I look at, I pay attention to, and I know I'm like, okay, so we're going to have to tweak this. We're going to have to change this. We're going to have to, okay, the liquidity's back into the market. Okay, we're going to be able to do this. These are kinds of moves that happen. The biggest move that had happened in gold happened, the move that I caught. That was this day right here. This was the biggest day since what? This day right here. Easy, I can clearly see it. This day right here. And then guess what? What is supposed to happen? Look, plain and simple what you guys have to see. Look at this. Where did this candle derive from? It derived from this resistance here. This is where this candle derived from, guys. Right here. What happened? the market, the money, stopped right there and came right back up. Look at this. 700 pips to the upside. What happens if that move decides to go to the downside? Where does it go? It goes almost down to what support right there. It goes almost down to that support. It chose not to. This shows me that the sellers, they're not there. The selling power is not there. It's done. They exited. Okay, cool. They're back up again. They're back at this line again. These are things that you have to be able to see. These are things that you have to be able to pay attention to. And that if you don't know what you don't know, what you don't have. This is why I'm explaining this stuff to you guys, so you can see these things. Same thing's supposed to happen right now. Gold off this level is supposed to drop. This head and shoulders, all this pattern, everything that it did, it's supposed to drop, at least to here, because that's what it shows us. It shows us that it could give us that. But does it mean that it will? No, it doesn't mean that it will. But it shows us that it can potentially drop all the way down there. And those are things that I pay close attention to, because if it rejects off of here, where is it? Where is the market always shown us that it goes? Well, it shows us that, it at least goes to like here, right? Now, this could be the range. This could be the range. So from here to here, is that reasonable? Yeah, that's a reasonable move. Is from here to here a reasonable move? Yeah, because it shows us these past two lines over here. So being able to see these things, being able to spot these things, this is what pays you. This is what makes you money, guys. These are the things that you have to be able to see in your path to becoming a professional. And these are the things that you have to know in your path to becoming a professional. Everything I just discussed, everything I just talked about is extremely important to your leveling up inside of this market, to you being able to take yourself to the next level inside of this market. It's very, very important that you guys see those things. So these are the levels, these are the zones, and these are the things that you're looking for. These are the things that you're paying attention to. All these different things, being able to see the liquidity and understanding. So it's not always going to be the same as it is, every single time. Sometimes it is going to take time to realize these things, to figure these things out. But those are the things that I wanted to explain to you guys and talk about with you guys, so that you guys have a better understanding of the market, what you're looking for, what liquidity means, how money can be moved into different currencies, indices, pairs, different things like that. Explain the odd USD trade in detail, so you guys know, what we're looking for, the different factors that happen that begin to negate the trade, and all the different aspects, all the different factors that begin to happen inside of the market. But I'm going to open it up to anybody who has any questions over everything that I just said. Does anybody have anything that they want to ask me that they need clarity on? Not at all? Raphael, you unmuted yourself, so I'm not. You
Hold
got
up.
some?
Hello?
You got something?
Yeah, how long is too long to hold a trade? Because I catch myself sometimes at a 10% gain, and then like I know you're reaching for the 3 to 1, right? But then sometimes you get stuck at a 10% gain, and
Mm-hmm.
then you kind of like just like tell yourself, okay, should I how long should I stay at that moment to be like, okay, well, you know what, I'm gonna go ahead and pull out, or just let it just run its course?
Well, so with the trades going into 10% in profit, you
Hmm.
have different factors that are going to come into play. One is your entry. Where was your entry based upon, you know, the trade that you got in? What's the entry point? So if you're getting in a trade then you have to understand, okay, where's my entry? I entered at this price, and here is my stop loss. So then you know entry, you know exit. So once you have your exit set, you know, okay, this is where I am going to get out at whenever it reaches this point. Either I'm going to get out in the positive, or I'm going to get out into the negative. So let's just use this odd trade as an example of where we entered. We entered, which I don't know how this happened. We entered like right here at the 300 mark, and then our stop loss was 30 pips at the 600 point. And so this was our entry point right there. Then we went about a little over 5% in profit on this trade, right? So we went a little over 5% in profit on this trade setup. So with this, we want at least this thing to start to clear this sell zone. We want to see it start clearing it, like starting to pull orders down, 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 down. And then once you start seeing that, you know your exit's here, and you're like, okay, if I see the market going in my favor and I enter off of this point right here, and I start seeing the market going, then what you're doing is you're letting this trade ride in the direction, because what was your exit strategy? Well, oh, damn, hold on. Your exit strategy isn't going to most likely be 10%, which is going to be right here, because what does the market tell you over here? Your goal of this trade was through here, and the market shows that it goes down to here, to there, once it gets to this point right here. So the complex thing about trading, like I said, um, and like I said on the earlier in the conversation, like I said on these things, I was talking about, understanding, or when the trade, when you're up 10%, or when you start seeing your account is up, and then all of a sudden you see that you lose all of those profits, in your mind, it can be very demoralizing because you see your trades go so much in profit, and you're like, damn, I have nothing to show for it at a point because of this. But that's why you have to be clear, and you have to agree before you get into the trade that my reasoning for getting in this trade is because I want to ride it to a 3-to-1. That's what you're saying to yourself. You're like, okay, I'm gonna go to this level down here. This is my goal. This is where the market shows me that it can go. But then of course you'll have red flags that come up, and it's if, say the trade begins to trend to like right here or something. Well, this right here is going to put you at like 2.2-to-1 off of this level. But if it starts stopping and stopping and stopping and stopping and stopping, and you just start seeing that, don't be oblivious to that this could be a newfound support in the market, because it could, because that's what this box is actually. It's a support for the price right here. And then what you want to do is pay yourself a little bit. So what you do is take half your position out, pay yourself a little bit, move your stop loss to break even. So instead of your stop loss being all the way back here, you're going to move it to break even. And then if this market decides to go in your favor, it's going to keep dropping. Because what if it never comes back up here? It never does. But and that's the thing in trading, is it's not what we're used to. It's a paradox. It's not what we're used to in our everyday life. So for some of us, it can be daunting and extremely difficult to figure out how to really make money from the market. But it's what you have to understand is, like, once the trade reaches this point, okay, I'm going to move my stop loss to break even. Once the trade gets to This point, I'm going to take out half my position. Once the trade starts putting up red flags, okay, I'm going to exit half my position and let the rest ride. Because it could be stopping at that point to build up more money, to build up more liquidity for a next move. And it starts looking at, okay, where's all the buyers at? Where's all the sellers at? And they're like, oh, there's a lot more sellers than buyers. Well, we can't really fight the buyers anymore, so we have to keep dropping. So it goes based off of, zones of support and resistance that happen like right in front of your face, and then it also goes off of your entry and exit strategy, because at times the market is going to pull up entry and exits. The market is going to pull up entry and exits like all the time, and sometimes it's going to have new supports and new resistances that get created, just it seems like out of thin air. And then sometimes the market's just going to have moments where something crazy happens in the world and it just has like a big spike in one direction or something. But that's usually, how those things happen. But does that make sense to what I just said?
Yeah, it makes sense.
Okay.
Yeah, because there is times where I catch myself, then just like you said, it'll start to just sit there,
Hmm.
and then at that point I'm kind of like, okay, I'll just let it ride out, and then it just does the opposite. So then I wake up in the morning and it's gone, you
Hmm.
know. But like I I remember last week I sent you a message of the same exact layout that you have right now, and
Hmm.
whenever you put in the alert to for the sale. I was excited because I basically did that on my own before I even sent it to you, and I basically had already put in a trade before you had called it because I had it at a different entry, you know.
Uh-huh.
So when I seen it hit my stop loss, I was like, oh, okay, well, you know what? At least I followed through everything that was basically told. So I wasn't all like, all mad or nothing like that because I actually did it the way I was supposed to.
Exactly.
So.
And that is what you have to connect to. That is what is going to help you in trading, is connecting to that emotion and being like, wow, I'm actually doing the steps that I need to do to be successful in this market. That's what you have to follow. Not about being right or wrong or about how much money you're going to make, that you have to connect to that. Because, like, to get to where I am now, I had to, over time, connect to that emotion or connect to that feeling that, okay, I'm actually following what I need to be doing. I'm doing what I need to be doing whenever I see it. When I see it build up off of these bigger time frames, okay, I see where the stop loss needs to go. And I'm like, okay, cool. This is where I have to put my stop loss right here. And when you do that, you're doing exactly what you're supposed to be doing every single time. That's the key. It's not about, worrying about the money and stuff like that. I mean, now it's cool for me. I mean, I can just throw a 10 lot on and be up $1,000 in like 2 minutes. Like, that's a cool thing. But that's exciting for me. I'm not saying that it's not exciting, or like I don't think it's cool or anything, but it's just that's where I'm at. And so it's the same thing. I had to get there, and that was after blown account after blown account and trading like an idiot and being greedy all the time and just not following the things that I needed to follow. So those things happen as you continue to master your emotions and master yourself and just take control and just stop letting your. And hey, I'm telling you guys, read the story I put on my Instagram. It is really good. I really thoroughly explained it in words of what I'm saying. Well, in like a, a sentence form. There we go.
Yo, John, I have a question real quick.
What's up, boy?
So, can you look at GA real quick? Nothing about any buy or sell, but essentially, you just mentioned. I can't remember who just asked the last question,
Uh-huh.
but he was stuck on like, how do I know where to take it? So I was in for the buy, right?
Right.
And it obviously came back and it like shot straight past my stop loss. I already pulled out because I already kind of hit my 3-to-1.
Mm-hmm.
But you see, I saw that consolidation right there, and I was like, okay, this is
Up
something that
here.
doesn't want to break. And I was like, maybe this
Up
is a
here.
new resistance.
Up here. You seen it?
I know. Wait, what are we on the 4 hour right now? I think so. Because hold
Like
on, I'm trying to look at mine. Yeah, I saw that, and I was like, I don't know about this anymore.
yeah, and see that's fine. And I mean that's exactly right. That is like the perfect definition of what that looks like. This right here is exactly that. And I mean, it doesn't really pay. It doesn't, and this is the weird thing that like I see more now because I my eyes have just gotten used to seeing it so much. But this is the move right here. Like this is the move right here. You did this perfect. This is basically the same thing as AU. This thing basically moves inverted of what odd does. You did a 30 pip stop loss on this trade. This was your stop loss. It was right there. This was your trade. Here's your move right here. And then this was your 3-to-1. It hit it. And so I'm assuming what you're saying is that you had already taken half profits on the trade and then you had the other position in, is what you're saying?
Yeah, but I was also in like actually no wait. I wasn't in there. I was actually in where it kind of crosses. Like like a little bit back like I'm trying to see like I'm on my phone right now, so I'm trying to like look at my chart at the same time and like go back and forth with the
And you
screens.
got in like
But
what
I
I thought.
cuz I got in I didn't get in I don't think I got in there. I'm trying to see exactly.
I'm almost positive you got in like whenever you told me.
All right, so my price I think it's at 7 1.78291. Like no, I'm sorry. I'm trying to click on this thing. 1 second. All right, so my price is. I'm trying to just click the thing to open it. All right, so let's see. Yeah, no, my entry is 1.78291. Yeah.
Yeah, so you got in about right here. That was right at
So
3,
once I saw that consolidation, I was like,
right here. But you
but it
see,
already like pulled me out of the like I already hit my take profit.
right. And so, and that's the thing, you got rewarded for your ability to see this on this zone. I mean, this is just plain and simple. You seen the zone, you seen the level, you put your stop loss in a place where it was outside of the buyer, it was outside of the buying zone. You put it down here so that you seen all this, you got in like right around here and you've seen this happen, but you've seen it happen close to this zone right here. You've seen this. That's it. And then it came up and it hit your 3-to-1 and you got rewarded for this at the zone. But if you had your second position in and you're holding it, this would be a prime example of either let this position ride for the next wave of the move, which is going to be up here, which you're going to gain another 30% out of that move for it to rise up there with your second position. So you take 15% and then you gain, 30. This whole move would make you 45% ROI of your account. But then the market clearly is like up, comes down, shoot, because this right here should make continuation happen, not hold.
Right,
Because
it's making that
do you see
lower
the,
high. I mean lower.
huh?
I'm sorry, because it made that higher low right from
Yeah,
the.
yeah, it's uptrending right here. This is the part of the uptrend right here. All this is right here. It keeps making higher high or higher lows and higher highs. But this stopped right here. So this move, look at this move. This is a 140 pip move. Flip that to the upside, you can't even see the 140 pips in the screen. You don't even see it in the screen. That is the exact explanation of what I was giving about AU. It, for whatever reason, did not like any more buying on this point. It stopped for whatever reason, and it chose to flip on it, and it was done. But you got rewarded for that. You still made it. But see, my thing is I just normally, when I see it go 3-to-1, I put my stop loss to break even or to 1-to-1. So ideally, I mean, you knew that from last year. Like it wouldn't have gotten hit right here it would have gotten hit right here. And then if you were to have taken this same trade again right here, you see how the buyers tried to get back engaged here?
Yeah.
They still tried to get engaged right there. That would not be a bad buy either. Like if I didn't see all this going on and I'm like, oh, okay, this is a trade I want to take right here. That wouldn't be a bad buy. The market would just go against me and I would lose. It is what it is. So yeah, no, that was good though. You seen that and you chose to exit. But remember, you gotta agree that you're okay with that, because if you exit up here, you're getting 25 to 30% ROI on this trade. That means you got 2.15 to 3 times the amount of what you risked on this trade. So if you were to take this trade right here and lose it, you'd still be up 2.5 to 3 times the amount of what you just lost. You feel me? Or 1.5 to 2 times the amount of what you just lost. So
Right.
the probabilities is in your favor. That's the key. So no, you did fine. You did perfect.
No, I was trying to, because I noticed, I can't, like I said, I don't know who asked the last question, but he was like, when do I know how to like pull out and stuff? And I thought this would be like a good example to kind of show him that look at the market's doing. It's not really just consolidating. It's not breaking the
Right.
area like
Exactly.
it
That
should.
is a
So
good example. Yeah, that is a good example right there. That's a prime example of when if you're. I always say minimum the 3 to 1 if you're gonna do, like, if your goal is swing trade. Like if your goal is, if your goal when you get in is 3 to 1, then okay, follow the 3 to 1 rules. If your goal is, I'm going to trade the New York session, or I'm going to trade the London session, and I'm just going to look for 10 pips, or I'm just going to look for 5 pips, I'm just going to go for 15 pips, then make that your goal and be clear with it. Be like, okay, this is what I'm going to do. And you have to be clear with it, because if you're not, you're going to give your mind all this room to, when the trade goes 10 pips, you're going to be like, you know what? I might just hold this trade for this session. And the moment it comes back and goes negative, you're in panic mode. You hit that cycle again, straight back on that cycle. When your trade goes 3 to 1, you're like, you know what? I'm gonna keep the full position in. And then this would be in a prime example. All of a sudden that trade comes all the way back down again, and all of a sudden cycle starts right back over again. You're back in your mind again. You're back in your head. And it's that same vicious cycle that you continue to allow to control you over and over again. And that's what happens. It's because you don't have a clear defined goal whenever you go in. Okay. Who else has any other thing? Can we look at a buy on USD CAD? USD CAD, a buy. What are you, where's your buying zone? What's your,
I bought it. I buy stopped it at 150. I'm already in. I was already in the buy. I asked that question like I don't know, a little while ago, but I just buy stopped it off that little zone right there.
off of
That right there, yeah.
this? Oh yeah, off of that zone.
Yeah, that's why I buy stopped it. Yeah, but like I said, I buy stopped it like at 150, or was that where I bought it? Yeah.
Yeah.
27. Yeah, 27 150. So it might not be something you get like I don't know. Might not be a good enough reward right now.
So I'm just looking at the zone off the hourly. Double bottom zone. Yeah, I'm looking at this zone here. Sellers are here. Selling zone cross off that with a stop loss of, what was your stop loss size?
I just did a 25 pip one on this USD CAD.
150, 150, 25 pips under, yeah, and then zone is going up to here, which is going to be near the selling zone. Yeah, right here, you will most likely, looks like about right in here. Right.
Yeah, I know it's not full. Yeah.
Yeah, this is going to be a run-in of resistance. So that'll be a run-in of resistance. Yeah, that's pretty much the only thing that you'll have to deal with. This is like, how much is this going to be? 1.6. I would watch the price action on this. I would watch the price action on this level right here, and I would definitely, yeah, I'd watch the price action on this level right here and see what price does at this point. That's pretty much the only thing, but this is in a interesting zone. This whole thing is all right here. This whole thing is consolidation. Entire thing is consolidation. On USD CAD, there's been no movement off of this thing in the last, I just want to look at how many pips this range is, just to know. That is a 366, that is so small compared to that. There's one more pair I was going to look at. Damn it. I was going to look at something. I forgot. Does anybody else have any other questions or looks on a pair or anything? Eventually, the market is going to pick back up. As far as movements and things in the market, it's just going to happen. I'm excited for that day because it's going to be some big moves that are going to happen again, which I just absolutely love. I'll just be ecstatic for the market to start having some moves, because I'm looking at gold and I'm just like, man, gold is another one that, seeing this thing and seeing the potential move that gold can have, you just never know. You just never know when the move is going to be. Sometimes that's the thing I struggle with, is like just not knowing when the move is going to be and not wanting to miss, a big move in the market. But I know it's not just about always finding the big moves. It's about having the small moves accumulate up over time, and then just learning to survive the drawdown of, losing trades here and there. And whenever you lose those trades, you have to be able to understand that it's about bouncing back through the drawdown. And those are the kind of things that, I have to deal with. We all have to deal with. Everybody has to deal with it. But just don't be the reason why, you're constantly taking a step back all the time. And if it is, then, take a step back, sit down with yourself and write down and look at, why did I get into this trade? What was the reason of me? What was my goal in this? What was this? Yeah, exactly. What was the goal in this? How were my emotions whenever this happened? Because it's harder to look back on it, because at the time, sometimes you're like, oh damn, how was I thinking when that happened? But if you really just sit and think about it, you can actually really remember how you were feeling whenever the market was not going in your direction and when things weren't happening. And just remember, every single week, you're not going to have, a big percentages that happen all the time. And if you do, then be appreciative and thankful for that. Because if those do happen, then you're going to have really big moves that or really big times in your account, and you're just going to get paid out a lot. Some of you guys came in when, the market was moving incredibly fast last year in January, and some of you guys just now came in this year when the market is not moving incredibly fast. But I can tell you to not get distracted by, different things on social media, what different people say here, what different people say there. Don't try to follow all the hype of everything, because there's a lot out there, especially with social media, because anybody can have an opinion. And normally we look at followers to be like, well, this person knows what they're talking about in a sense. So, it's important that, you understand those things, but I know to not follow the hype of everything. So I just saying that everything that you're being shown is things that over time will be able to make you money. That's the key. And just that's why I go into detail to explain things so that you can understand, what you're actually looking for in the market. And then just the biggest thing is your risk management, where you enter at, and then the mastery of your mind. Those are going to be some of the three biggest things that are going to help you guys. But does anybody have anything else before I hop off this thing? Jesus, my freaking Achilles. I don't know what I did. I'm over here squatting too much. Oh. All right, so I guess we're good.
GG's, love you, man.
GG. Who was that? Was that money?
Yes, sir.
Yes, sir. That was money. All right, y'all. Y'all have a blessed one. Should be fine for the webinar on Sunday, because I actually want to. There's a lot of stuff I've been saying it on my social media, but there's more that I want to share. That's going to be good on this journey of trading, because we're in February. We're what, second weekend of February. And there's so many different factors happening, going on, all around the world. And I think you guys are seeing that there's a lot of different things, happening. There's a lot of stuff that, I pay attention to, as far as, the global economy, um, the global elites. I just don't post a lot of this stuff on my stories, because I just don't want to put that out there yet. It's not really something I want to do yet. But there's a lot of factors. There's a lot of things going on. Currency is going to be changing in the next probably about 5 years. So it's not necessarily mean it's a bad thing for us. It's just a place of adaptation that we're going to have to do. So, a lot of these things happen constantly. So it's going to be an interesting year and the next couple of years. So I'm just looking to really dominate the markets this year, and elevate inside of trading, and mastery of the emotions, mastery of reversal, and mastery of everything inside of the market. So I appreciate you guys and getting on, taking the time out. Remember, if you guys are struggling, with drawdown or certain things in the market, all you got to do is text me or call me. If I don't call you back, then, or if I don't pick up, I will call you back. So yeah, if you guys got anything, just let me know. I'll be on the phone all the damn time. So literally, I'll be on the phone all the time. So yeah, just hit me up. But all right, y'all, I'll see you guys on Sunday. And then have a blessed the rest of your Thursday night. And then have a great Friday, guys. I'll see you guys later. I'm going to upload the recording right now.
GG's.
GG's, we outie, like the RA boy.